You've worked hard to earn and save. Now it's time to make your money work hard for you. This is Empower Your Retirement with Frank and Frankie Guida of A Better Way Financial.
Gentlemen, it is fall. We're going to start the conversation talking about two of your favorite things. We're going to talk football and taxes. Everybody ready?
Oh, yeah, that sounds exciting.
Everybody's ready, but the Giants weren't ready.
Oh, I know.
They did not look good on offense at all.
It's all right. We can be sympathetic then on our favorite teams because my Virginia Tech Hokies are not looking that great either. It's a bit of a slow start to the season.
But the Eagles won. That was good for them.
There you go. That's right. Let's look at the highlights.
Yes.
So when it comes to football, it's amazing what we can learn. Actually, I feel like we have had this conversation about lessons, kind of like the unfortunate lessons that we can look at as far as professional athletes go and how to do better from a financial perspective. I do think, hasn't the NFL got better about working to help these young players and coach them off the field as far as finances go? That's something that we definitely need to say changes in, guys, because, you know, when you're 20 years old, you got all this money coming at you. How are you supposed to know what to do?
Yeah, you got to trust people, you know, who have done it before and kind of look for the older guys, the veterans, see what are they doing, and hopefully they're doing the right things and can help guide you.
And the players I talked to, I think would agree with you that the NFL is stepping up and helping out in that fashion.
Frankie, you brought up the notion of those older guys that came ahead of you. What did they do? Here we are talking about the folks that you work with, folks that are close to retirement. So many of these people, smart, hardworking folks, and yet they have no idea so many things about taking their savings and making it work for them. So let's discuss the notion of what we can learn from professional athletes and our own tax plan. Cam Newton, if you are a fan of football, you know the name. He is a retired NFL quarterback superstar. Now he's on ESPN's First Take. And he says one of the biggest money mistakes that pro athletes make is failing to understand how their income will be taxed. Here's Cam Newton.
See, the thing is, in one demographic, from a W-2 to a W-9, right, you're writing off what you spend. But people don't realize, as an athlete, you're a part of the 1%. So not only you get state tax, Chicago, Illinois, you're getting federal tax. Every state that you play in, you get taxed with those states. So, bro, how do you spend to blow $30 million? Taxes.
That evil stepbrother, taxes. It's coming for you.
That's where the money goes.
That's it. Guys, as I was just saying, many retirees, they don't understand how their income will be taxed once they finally get to stop working. So let's talk about what can that include? And then how do you, at A Better Way Financial, come up with a workable plan to help mitigate taxes potentially?
You know, it's funny when we do our dinner workshops, you know, Frankie often asks the question, you know, what do you think is the biggest expense in retirement? And inevitably, most people will say healthcare. And you know what? While that's the most popular answer, it's not the most accurate answer. The most accurate answer is taxes, you know, and that's something that people do have to prepare for. And that's what we do here at A Better Way Financial. We're showing people how to save money on taxes throughout the rest of their life. You know, I'll sit there and I'll explain to folks, you know, if you go to one of the big box companies, they're not tax planners. And you know that because everything that they give you on the bottom of the sheet says, you know, consult your tax advisor. Most folks think that their tax advisor is actually their accountant. And the thing is, that's not who really they're referring to. What they're actually referring to is a tax planner. What an accountant does, accountants are wonderful people, but what they're doing is they're looking in the rear view mirror and they're trying to save people money on taxes for last year. And what a planner is doing is they're looking forward into the windshield and they're saying, well, how do we save taxes or the most amount of taxes throughout people's lifetime? The wonderful thing is here at A Better Way Financial, the folks that came to us last year, the average we were able to show them to save throughout the rest of their life was over $800,000 in taxes over the rest of their life, which has been phenomenal for them. So now getting back to the question that you asked, well, what about Pennsylvania? What about here in the Lehigh Valley? Here in Pennsylvania, we really have it pretty good as far as taxes for retirement folks, don't we, Frankie?
Yeah. If you have a pension, you don't have to worry about paying any state income taxes on the pension. Same thing with any IRA or investment retirement account distributions from your 401ks or IRAs. So as far as states go, Pennsylvania is not a bad state to retire. Our neighbor, New Jersey, Not as good. Not as good. If you take out IRA distributions, you do have to pay those taxes. So it is something that you want to look at. You want to understand, well, how does it work in my specific state? Because it can really make a difference across those state lines. Now, there still is that federal tax burden. And so if you have that IRA distribution, if you have that pension income, if you have any other type of income coming in from that 401k, that's going to be automatically taxed in the federal income tax brackets. So that's something that people do have to plan for. And a lot of people have IRAs, they have 401ks, and they need to have a plan in order to make sure that they're taking out effectively from those accounts so that they're minimizing their tax burden over the course of their retirement years. Because if they don't plan, what happens is that money continues to accumulate, continues to grow. Then they have to start taking out required minimum distributions and paying Uncle Sam a nice cut of their retirement savings. And so you want to make sure that you're paying the least amount in taxes over the course of your retirement. So what we do is we look into strategies we can use to minimize those taxes. One of the things we look at is how can we make sure that you're taking from the right accounts at the right times, distributing from the right accounts so that you're minimizing your tax burden over your retirement. And how do you make sure that you're getting the most out of those funds? And one of the strategies we use is a long-term capital gain strategy. So for any of the non-qualified or after-tax accounts, we're looking into making sure that you're getting long-term capital gains treatment instead of the short-term capital gains or ordinary income taxes, which ultimately is going to lower most of the retirees' tax brackets there. And then we also look into strategies such as qualified charitable distributions. So if somebody is charitably inclined, they can look into using the funds from their IRA or 401k. Instead of having those funds come directly out of their bank account or checking account, they can have the money come from their IRA. They don't have to pay taxes. Neither does the church or the charity whom they give to. They don't have to pay the taxes either, and it can satisfy a portion of their required minimum distribution. So this is a way to be able to make it so that you're able to gift and you're able to do it without having to pay the taxes. And another strategy we use is the Roth conversion strategy, transitioning more and more of that estate into those tax-free Roth IRAs so that you're paying less in taxes over your lifetime projected, and so is that next generation when you leave those funds behind. So if you don't have a plan for how you're going to systematically make your portfolio more tax-free and minimize your tax burden in retirement, give us a call right now for your complimentary tax plan and review. That number to dial is 610-440-3722. If you're 55 and older and you save $500,000 or more for your retirement, we are offering this right now for the next 5 callers. So give us a call for your complimentary tax plan and review. That number is 610-440-3722.
Well, this kind of reminds me of this fella that came in mid-60s, was a longtime radio listener. He said to himself, you know what, let me go to one of these workshops and learn a little bit more about what these guys have to offer. And he did that. And then he finally came in. The guy had, saved a nice portfolio at about $1.6 million.
Wow.
Wanted to live on $50,000 a year.
Oh, geez.
And let's tell him what we did for him, Frankie.
Yeah, we said, well, taxes is a concern of yours. What can we do to try to mitigate those taxes?
Was his 1.4 in one of those, was it like in a 401k, had never been taxed yet?
Oh, yeah, almost all of it was in a 401k.
It was 1.6.
Yeah, so it was like, okay, well, here's what's going to happen. You're only living on around $50,000 of income. That 1.6 is going to continue to grow and accumulate, and then you're going to get slammed when it comes to required minimum distributions. You're going to be forced to take a lot of money out of that 401k and IRA and pay the taxes on it. And what we did is we showed them, here's what we can do to reposition the portfolio more and more tax efficiently over the course of your retirement. And we showed him that by making it more and more tax efficient, he was projected to save over $400,000 in taxes over the course of his lifetime.
Wow.
And so we showed him with that tax savings, that $400,000 less that you're paying in taxes is $400,000 more that you can utilize over the course of your retirement to enjoy, to do those things that you wanted to do. In his particular circumstances, he didn't have kids that he was planning to leave the funds to. He wanted to enjoy it. He wanted to be able to live his life and get the most out of his retirement. We said, here's an extra $400,000 that you can utilize over the course of your retirement in tax savings. And so that was able to put a smile on his face and show him that, hey, I can do some of those things that I really want to do. I can live on more than that $50,000 of income. And we showed him that he could actually double that income and go up to $103,000 of income each year for the rest of his retirement.
Wow.
So he doesn't have to worry about, watching the pennies, watching the bills, watching the expenses, more so can focus on, well, what do I want to do?
Yeah.
What do I want to cross off my bucket list? And so doing the type of planning we were able to do, we were able to show him that he could live on more income and enjoy more in his retirement years. And so this was a very exciting thing to see and to be able to show him. And this is something that we do for folks all the time. So if you don't have a tax plan, if you don't have strategies that you can use to minimize your tax burden, custom made for you, you should give us a call and we can show you what you can do to make sure that you're making the most out of your retirement from a tax perspective. So if you're 55 and older and you save $500,000 or more for your retirement, for the next 5 callers, we are offering a complimentary tax plan and review where we're going to be able to look over your tax situation and show you strategies that you can use over the course of your retirement to get the most out of your retirement. All you have to do is give us a call right now, 610-440-3722. That's 610-440-3722.
Thanks for listening to Empower Your Retirement with Frank and Frankie Guida. To learn more, visit abetterwayfinancial.com.
By contacting us, we'll review aspects of your retirement portfolio to include suggestions about how best to utilize estate, tax, and retirement planning strategies and other financial services, or if changing management styles is appropriate for your specific needs and objectives. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendations to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. A Better Way Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company. Any client experiences discussed during this show are unique to that client, and they are not meant to imply or suggest you will experience the same results. Advisory services offered through A Better Way Financial. Insurance offered through licensed professionals at A Better Way Financial. Pennsylvania Insurance License number 301779.